that has been working with small businesses and entrepreneurs for over 30 years. I've literally worked with thousands of people to help them understand their businesses, understand their tax responsibilities, understand how they can make and keep more money, understand how they can have the business that they have always wanted and have financial freedom. I love working with small businesses, and I particularly love working with heart-centered entrepreneurs that are making a difference in the world and changing the way business takes place. So it's exciting. We work with a lot of sole proprietors. We work with a lot of people who are really making some exciting things happen in the world. And those are the people that I want to spend my time with and that I want to associate with. And so therefore my accounting practice focuses on providing the resources that those people need to really, really write their own check in their business. I believe that your money tells a story, and it is a reflection of you and the choices that you have made, and it is an opportunity for you to make new decisions and bring out the things that you want to have. It is always your choice. You have 100% responsibility for every choice you make. So you want to make the best possible decisions. And there's really, I say, 5 simple steps to writing your story and writing your own check. Simple step number 1 is you need to know what you want and how much you need. Now what this means is you actually have a record that tells you exactly how many dollars a month you spend on different categories of expenses. You know how much it costs you to live, and you know how much the things you want to have in your life cost you. So if you want to do a trip to Peru, if you want to engage coaching with a mastermind group, if you want to do advertising on Facebook, you've got to know how much those things cost. It's all well and good to say, I want a Mercedes, but do you know how much the Mercedes costs? You've got to be specific. The universe loves specificity. So you have got to be absolutely specific and create a vision of what your ideal life is like. Literally write a story about how your ideal day goes. When you get up in the morning, what you do, what activities you take place, what people you meet with, who you talk to, what you talk about, how money impacts that, and how you spend money, and how you take in money. You want to focus on both. So you really need to be specific about how much money you want and need. A lot of people set their goals and they say, I want to make $100,000. Well, they don't really know what that $100,000 is going to buy. They don't know what they're going to do with it. So I like to start at the bottom of the equation. The bottom of the equation is I want to have $2,000 every month to spend on my mortgage and my car and my groceries and my housekeeper and my children and every other single thing that you want to have in your life. And this is where you want to make a dream. You don't want to come back and try to budget and allocate. That's not what I'm talking about. I'm talking about creating a vision of your ideal life, and noting how much that life costs so that you know exactly how much money you need in order to have the life you want. Simple step number 2 is to really take responsibility for your choices. And what this means is you need to know and understand the choices that you have made and let go of whether they were good or bad choices and make conscious new choices. You have to have a clear understanding of your business and what's happened so far in your business. And that means you need numbers, you need records. What numbers tell you what your priorities are, where you have been, and they tell you very frequently where you are going. So you've got to understand the story that your money tells you. Now, in the business world, numbers are the language of money, and it is a language that enables you to make better decisions and to go forward in a way that is going to be more profitable to you. So the second step, number 1 step is to have a vision of what you need and want. The second step is to understand very clearly what's happening in your business. This means you need books and records. They can't be commingled with all your personal accounts. They've got to be separate and independent. Number 1 thing, you need a separate checking account. You need all of your business records independent from your personal records so that you can understand what's really happening in your business. The next step is to make really conscious decisions about how you are going to go forward in your business. Now, David Nagel talks about making decisions, and he has 4 simple steps for making decisions. Number 1, is it something that you want to do, be, or have? And you have to answer that question really honestly. Is it something that you want to do, be, or have? Maybe the answer is no when you're serious about it. The second thing is, does it take you in the direction of your dreams? Does it take you in the direction of your goals? And if it does, then you need to consider that is it within the scope of your values? Is it legal? Is it the right thing to do for all people concerned? And then the next step that is really critical is you have to take action, and you have to move forward in the direction of your dreams. You don't have to know how it's going to happen. You just have to know the next step. But taking action and making conscious choices towards where you're going, and here's what that looks like. What that looks like is you have records every month that says this month I took in X number of dollars and I spent money on this, 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 and this. I have this much left. Now, based on what happened this month and based upon what my goal and my vision is, this is what I need to do next month. And every business has a chief financial officer. And in most cases, that chief financial officer is you. And you need to be making decisions based upon good, sound financial data. So you look at your vision, you look at what actually happened, and you look at where you want to go. And you make decisions based on that. You don't have to know how, you just have to take the next common step. But you have to take the time to look at those things, and that means It doesn't have to be a painful process. It can be really simple to sit down once a month, once a week, and look at your numbers and really take in what they're telling you. You have to realize that you are 100% responsible. So everything that happens, you have chosen that reality. Look at your results, look at why you've chosen them and how you've benefited from it, and make committed decisions that take you towards your goals. There's a quote by Richard Bach in a book called Illusions that I love. And the quote is, argue your limitations and they will be yours. If you are determined that all you can charge your customers is $100 an hour, then you argue your limitations and they will be yours. If you choose to change that belief and argue different limitations, then there are no limits to what you can accomplish and what you can do and what you can have in your business. But you've got to be very careful to not argue your own limitations, because that is what keeps you stuck. The next step is to appreciate everything that the universe provides for you and be grateful and love your life and all of its gifts. So those are 5 simple steps. Number 1, you have a vision. Number 2, you have history. You have records. You know what is in the background. Number 3, you compare current results to the vision that you want to have. And number 4, you take action and you move directly toward conscious decisions that meet your goals. That's not what you usually think an accountant is going to talk about. Usually you think an accountant is going to talk about the IRS and taxes, and those are important things, and you really need to be aware of them. But the purpose of your records is fundamentally for you to make good business decisions so that you can have the life you want. Secondarily, you're going to have to deal with the government. And that is a process that can be very simple. And all you need is good records to do it. And those good records means you have receipts for all of your business transactions, your income and your expenses. It means you have copies of all your bank statements. It means you have copies of all your credit card statements. Don't rely on the bank to keep those statements for you, because generally they'll have 18 months worth of information, and beyond that you're going to have to pay them to go back and get. So you want at every month to save your bank statement, save your credit card statement. It doesn't have to be in paper. It can be in a PDF format so that you could print it at some point in the future. Every month you need a ledger that shows what income came in, what expenses went out, so that you can compare to what you intended to have happen. At the end of the year, you'll take those same records and you will report to the IRS based upon the profit in your business. Now, you pay tax on the net profit in your business. That is based upon the gross receipts, that's everything you take in, less all of your expenses. Now, people sometimes make a really big deal about what's deductible, and it's really quite simple. If it's ordinary and necessary in your business to incur an expense, if you can see that that expense is going to generate revenue for your business, then that expense should be deducted on your tax return. You should document why, and you should go on down the road and not worry about it. what's deductible for one kind of business is very different from what's deductible for other kinds of business. Some businesses need GoToWebinar, and some businesses need the internet, and some businesses need beer, and some businesses need music, and all sorts of things. So you really have to look at if it's ordinary and necessary. Is it going to help you generate money? If it is, then it fits into your good business decisions, which come first, and the totals of that are reported on your income tax return. Now, every kind of business is going to report income on their income tax return. You might be a sole proprietor, in which case you'll file a Schedule C on your individual income tax return. You might be a limited liability company, and there's several different ways that a limited liability company can report their taxes. You may have another person in your business. You may have a partner, or you may have something called an S corporation. And each one of these kinds of entities has a place and is important and gives you some opportunity for some tax planning and some benefit. And when you get your business rolling, you're going to want to have an entity that is going to be the most tax beneficial to you. And you really need to stop and talk to someone who knows about those entities so that they can give you the best advice. Each situation is unique and individual, and the tax ramifications of each choice is unique and individual. In general, there's a couple of kinds of taxes that people are concerned about. Number one is income tax. Now, the base income tax rate in this country, the bottom income tax rate, is 15%. So you can always plan on 15%, and that is a good starting point. There's also something called Social Security. Now, when you're self-employed, you pay self-employment tax on your net profit, and self-employment tax is 15.3%. Now, it is very important to understand that that's 15.3% income tax, Social Security tax, and 15% income tax. And most states have an income tax. So with a little bit of simple math, people always ask me, how much money do I need to set aside for taxes? And I always say that if you set aside a third of your net profit, that's after expenses, if you set aside a third of that, then you're probably going to be pretty well covered to pay your tax liability. If you have an S corporation, you're an employee of that S corporation, and when you have employees, you withhold their income tax and you withhold Social Security for their taxes. So whether you're an employee or you're a sole proprietor, either way there's self-employment tax, Social Security tax, and either way there is an income tax. So it's a good rule of thumb to look at about a third of your net. So that means you have to have the records to know what your net is. You are required to have, we have what you call a pay-as-you-go income tax system. And what that means is when you file your tax return at the end of the year, the rules are set up such that you should never owe more than $1,000. And if you're an employee, it's paid in through withholding. And if you are self-employed, it's paid in through quarterly estimated taxes. And those are due in April, June, September, and January of the following year. Now, those estimated taxes should basically get you to an even point with the government. You don't want to pay too much. You don't want to pay too little. You want to be even with them. That's the goal. So that means you need records throughout the year so that you can decide January, February, March, how much money did you make? What do you need to pay in estimates in April? April, May, and June, how much money did you make? How much estimates do you need to pay in June? That is the requirement. If you don't make estimated tax payments, they will penalize you for failing to do so. So it is an essential part of doing business. Now, the IRS in general are just people that are trying to do their job. They're not inherently good or inherently bad. They're not evil. They don't want to put you in jail. They just want to do what needs to be done. You can make their life simple, and you can make your life simple and be audit-proof by having all the records you need to have in your possession. So at the end of the year, you need all your bank statements. You need all your credit card statements. You need all of your receipts for your business expenses. You need to document why they were business expenses, why they were ordinary and necessary in your business. And you can put them in a very simple accordion file that's alphabetized. Doesn't have to be anything fancy. And you have to have some means of keeping those numbers all together throughout the year. Now, at my company, we use QuickBooks, and we support entrepreneurs all over the country in keeping those QuickBooks so that they have the information they need throughout the year. You can do your own, but it is essential that you do something. You do not want to just let it ride and wait until next March when your tax returns are due and find out how much you made then, because that doesn't give you any opportunity to plan. It doesn't give you any opportunity to structure things so that you pay the least amount of tax possible. And so you need those records, and then when the IRS calls, they'll ask you, we see you spent $5,000 on supply, and you will be able to produce the receipts that show you spent $5,000 on supply. And they will say, oh, okay, cool. That's all that happens. It's no reason to live in fear. If you get to a point that you can't pay your taxes, it's April 15th, and you find out that you owe more than you can pay. Happens to a lot of people every year. There are ways to set up installment agreements with the IRS. It's really very simple. You can do it at irs.gov. You can do it yourself. It's very simple, and it is painless. But the best decision is to make estimated payments throughout the year so that you don't get surprised, so that you know what's going on in your business. The way you write your own check in your business is you decide, number one, how much that check needs to be. How much do you need to have the house on the beach? How much do you need to have the car you want to drive? How much do you need to send your kids to the schools you want to send your schools to? What do you actually need? In order to write that check, you have to work backwards. You have to say, I need $5,000 a month. And then you need to work back as to what your business expenses are going to be. And you can get that from your history. Again, looking back at what has happened before, and then make decisions that lead you to creating the revenue that you need to have at the top of that P&L so that you have the number you want at the bottom of the P&L. Now, that's not the way most CPAs talk about it. It's not the way most financial professionals talk about it. But it is how you write your own check. It is how you decide how much money you want to make and then make it happen. I would love to talk further with you. You can find me at MaddieBrown.com. I work with people all over the United States, and I love working with small businesses, solo entrepreneurs, heart-centered businesses, coaches, healers, practitioners, teachers, and people who, in general, love their life and their business. So, give me a call, look me up at MaddieBrown.com, and I hope to talk to you soon.